Two oil giants playing footsie under the table. How Nike plans to turn lemons into lemonade. The prescription that made one stock drop 20%. Plus, the housing numbers making builders sweat. Welcome to MRKTcap, your weekly summary of the top stock market news for swing traders made simple, useful, and surprisingly entertaining. I'm your host, Tela Holcomb. The market was on fire this week with the Dow closing up 1,612.45 points. The S&P closed up 205.23 points, and the Nasdaq closed up 826.05 points. Back in April, I shared how BP was looking like a snack for competitors to snatch up. This week, BP's stock hit the gas before cha-cha sliding back to reality after the Wall Street Journal spilled news about early-stage acquisition talks with SHEL. BP shot up 10% to $32.94. But hold up, SHEL said, nah, not happening, and denied any talks. BP's stock pulled back, ending up 1.64% at $30.32. Behind the scenes, sources say if BP gets sold, it'll be more like a yard sale. Pieces going to different buyers rather than one mega deal. Elliott Management, an investment firm, is sitting on a 5% stake in BP, pushing them to focus on fossil fuels after their green energy pivot flopped. Paul Sankey from Sankey Research called BP's renewable strategy a huge error because oil and renewable projects run on different financial structures. It's like trying to make a basketball player compete in the Olympics as a swimmer. Different game, different rules, different returns. Keep an eye on both BP and SHEL. Merger talks, even denied ones, tend to create trading opportunities as more details emerge. Nike's been fighting for its life like R. Kelly since 2020 when they ghosted wholesale partners like Foot Locker and Dick's to push their own stores and website. That move backfired worse than wearing knockoffs to SneakerCon. Their classic kicks, Air Force Ones, Dunks, and Jordans got stale, letting brands like Hoka and On Running steal their shine. Fast forward to now, and Nike's stock is up 17% after their Q4 earnings report. Despite sales down 12% and profits falling 86%, Wall Street's vibing with Nike's new Win Now strategy. They're linking back with Amazon after a 6-year timeout and going hard for female shoppers. That Asia Wilson collab, gone in 3 minutes flat. HSBC Bank is feeling it too, giving Nike its first buy rating in 3.5 years with an $80 price target. But don't pop bottles yet. Between Trump's 30% tariffs on China imports and clearing out old inventory, profits going to stay pressed through early 2026. Nike's turnaround plan sounds nice, but the proof's going to be in the profits, so keep an eye on those quarterly numbers. Novo Nordisk pulled the plug on its collab with Hims and Hers Health faster than you can blink, sending Hims stock down 34%. Why the breakup? Novo Nordisk caught Hims pushing knockoff versions of their weight loss drug, Wegovy, through compounding pharmacies. A big no-no now that the real deal's back in stock. Hims tried playing it off like some patients need custom versions, but Novo Nordisk wasn't buying what they were selling. Novo Nordisk called Hims out for deceptive marketing and mass-producing copycat compounds under the false guise of personalization. Now, Hims is left on red and their stocks looking as deflated as my gym membership hopes in January. When Big Pharma cuts ties over compliance issues, the fallout hits hard and fast. Keep an eye on how Hims plans to recover from this breakup and whether pushing knockoffs gets them in more hot water. Pop quiz: a limit order lets you A, buy or sell immediately at the best available price. B, set the exact price you're willing to pay or receive. C, borrow money to buy more shares. The answer is coming up right after this rundown of more news from around the market. New home sales dropped 12.2% in May as inventory rises to highest level since 2020. Salesforce reveals AI handles up to 50% of tasks, marking shift in workplace tech. AeroVironment stock went up 20% after DroneMaker reports strong Q2 earnings and raises the bar for next quarter. Generac stock surges as heat waves and storm forecasts got everybody reaching for backup power. U.S. pressures China to keep Iran from blocking Strait of Hormuz oil shipments. Uber partners with Waymo to launch self-driving taxi service in Atlanta. Chinese tech giant prices electric SUV 10,000 yuan, about $1,400 below Tesla's Model Y. So what does a limit order let you do? B, set the exact price you're willing to pay or receive. Think of a limit order like saying, I'm only grabbing these sneakers if they drop to $120. No more, no less. Next week, the market is projected to trend up. Historically, the Dow's up 13 out of the last 15 years. The S&P up 14 out of 15, And the NASDAQ up 14 out of 15. This data is provided by SwingSet, the calendar of winning stock moves you'll wish you had sooner. Well, that's a wrap for this week's Market Cap. Happy trading, and as always, make sure you have a trading plan in place before you do the trade.